As we start the second quarter of 2024, the number one question I still get asked as a real estate agent is, when will the California real estate market crash? Well, in this video, I'll first tell you what I am seeing in Orange County, as that is the market I am in every day. And then after that, I will go over what is going on in California as a whole. Hi, it's Brooks Mars, MMG Real Estate Advisors. And even if you live in Orange County or think about moving to Orange County, be sure to watch this section about what's going on in California as a whole, as I believe it will help you get a better understanding for our real estate market. So just like checking the weather before stepping out for the day, where a simple glance at a reliable outdoor thermometer can offer more certainty than the often misleading forecast of weather apps, understanding the real estate market requires a similar approach. The most accurate measure isn't always from the myriad of experts weighing in. Instead, it's the raw data that gives the real story. In real estate, that means looking directly at the current supply and demand. Since mortgage rates soared in 2022, the housing market has been a battleground between dwindling supply and increasing costs of home ownership. Sellers gained the upper hand as fewer homes were up for grabs, while buyers found some leverage as homes became less affordable. When rates soared past 3.25% in January and peaked over 7% by October, the highest in 2 decades, demand stalled and inventories grew. Contrast that with March of the previous year when homes couldn't hit the market fast enough to meet buyer demand, leading to a significant surge in home values. However, this year, with mortgage rates stabilizing between 6.6 and 7.1%, demand has crept up despite the higher borrowing costs, and the gap between active listings and pending sales has tightened significantly, down to just 400 homes. The Federal Reserve's stance against inflation, initially unwavering its commitment to maintain high rates, has subtly shifted. Discussion has moved from a single rate reduction to potentially 3 cuts in 2024, highlighting a reactive stance to economic data. This shift underscores the resilience observed in the U.S. economy, even as it faces inflationary pressures and a closely watched job market, with recent indicators suggesting continued strength. Now, interest rates have been at the forefront of market volatility, reaching highs not seen since 2000 and significantly influencing market activity. The fluctuations around the 7% mark serve as a psychological barrier, influencing buyer enthusiasm and market trends. Currently, as rates edge around this threshold, their impact on market dynamic is evident, with changes in buyer behavior observed when rates dip below or rise above this pivotal point. Now, this spring season, traditionally a time of increased market activity, is showing signs of deviation from typical patterns due to interest rate sensitivity. Both Southern California and the Bay Area exhibit these trends, with inventory levels and demand responding to the nuanced shifts in interest rates. This situation underscores the significant influence of mortgage rates on the real estate market. Taking a step back to pre-pandemic times gives further context. From 2017 to 2019, the beginning of April typically saw over 5,500 homes listed, with demand for nearly 2,700, a far cry from today's figures. Our current active listing sits at 2,017 homes, and the current demand is 1,560 pending sales. Despite what seemed like more activity back then, the current market's low supply and demand paint a picture of an intensely competitive scene. Now, Orange County's current expected market time, the duration it would take to sell all listings at the present pace of buying, stands at just 37 days. A swift market pace by any standard, and indicative of long queues at open houses, multiple bids, and homes selling over asking price. This isn't due to a spike in demand, which is actually tempered by high mortgage rates, but rather to a persistently low number of homes for sale. The reluctance of homeowners to list their properties, many locked into low fixed-rate mortgages, is a significant factor behind the lean inventory. This year, the market saw a substantial drop in new sellers compared to the 3-year average before COVID, contributing to the scarcity. For the market to shift in favor of buyers, we need to see a cooling off. A significant increase in inventory, akin to what was observed in 2022 with the initial rate hike. With 2024 showing more stability in rates and a slight increase in demand without a corresponding rise in inventory, the market's temperature remains high. So in essence, the Orange County's housing market's momentum is set to continue unabated as long as the inventory stays well below the levels seen in pre-pandemic times, keeping the pace brisk and the market temperature warm. Now, before we jump into California's real estate market as a whole, I wanted to say, if you find this video helpful so far, be sure to hit that like button, as it helps us greatly and can help others, like yourself, stay more informed. Now, for California. In the vibrant state of California, the real estate market has remained a beacon of strength and resilience, showcasing a remarkable performance in recent times. January of 2024 marked another milestone in this ongoing saga of prosperity, with both prices and sales volume of homes demonstrating notable increases. The median sale price of homes witnessed a year-over-year increase of 6.5%, elevating from $693,000 to an impressive $739,000. Similarly, the total number of homes sold experienced a rise, moving from 14,941 in the previous year to 6,220. This data, set against the backdrop of a 7.28% interest rate, poses the question, in the face of rising interest rates, does the California housing market still favor sellers? The evidence suggests a resounding yes. Now, as we delve deeper into the market specifics, Los Angeles presented itself as a standout, with homes reaching a median sale price of $947,000 in January 2024, marking a 2.5% increase from the year before. San Diego's market showed even more dramatic growth, with a year-over-year increase of 14.8%, bringing the median sale price to $909,000. This trend of rising prices was consistent across the state, with no markets experiencing a downturn in prices from the previous year. This upward trajectory in home prices, coupled with historically high interest rates that have deterred some potential home buyers, has not dampened the market. Instead, the scarcity of inventory has led to a competitive marketplace where 35.9% of homes sold above the listing price, indicating a robust demand that continues to outpace supply. So, for potential home buyers navigating this market, the high interest rates, currently at around 7%, present a formidable challenge. However, the market's dynamics offer a silver lining. With interest rates unlikely to decline in the near term, purchasing a home now could be a strategic move. This approach allows buyers to secure a property before any potential drop in rates, at which point refinancing could offer financial relief. And for sellers find themselves in an enviable position, able to leverage the current market conditions to their advantage. The data suggests that homes listed for sale not only sell faster, but also command prices that are significantly higher than those not listed for sale. This scenario presents an opportunity for sellers to realize considerable financial gains from their properties transactions. Now, as we survey the broader landscape of the California housing market, it's evident that it stands in stark contrast to the national trend, which has shown signs of slowing. Instead, California's market has thrived, with home values soaring by 40.6% over the past 5 years, and home sales in January 2024 climbing by 8.6% compared to the year prior. This enduring appeal of the California housing market, even amidst rising mortgage rates, speaks to the state's unique attractions, from its diverse and vibrant culture to its scenic landscapes and dynamic job market. Looking forward, the prospects for California real estate market remain bright. The market is poised to welcome back sellers who had previously retreated, drawn by the stabilizing mortgage rates expected in the later half of 2024, and the anticipated resurgence of buyer activity, buoyed by easing inflation and more favorable interest rates. With home prices set to continue their upward trajectory amid the persisting low supply and high demand, and new home construction sales expected to increase, the market is braced for a period of sustained activity and growth. California's housing market is on a path to maintain its resilience and demand, making it an opportune moment for both buying and selling properties in this ever-evolving landscape. So, in conclusion, the Orange County and California real estate markets in 2024 demonstrate resilience amidst fluctuating interest rates, with Orange County's expected market time at just 37 days. The region reflects a fast-moving market driven by low inventory rather than increased demand. Statewide, the market is thriving, evidenced by a 6.5% year-over-year increase in the median sale prices and an 8.6% rise in home sales, despite high interest rates around 7%. The persistent low supply, coupled with robust demand where many homes sell above the listing price, keeps the market favorable for sellers. Looking forward, stabilizing mortgage rates and anticipated buyer activity due to easing inflation could brighten the prospects for both buyers and sellers in California's real estate market. If you found this video helpful or informative, be sure to hit that like button. And if you want to see more, hit subscribe. Thank you for watching, and we'll see you on the next time.